Hello, and thank you for watching. My name is Josh Lipton, and today I wanted to share some of my thoughts on Airbnb. So, just to start, as a bit of background, I'm sure many of you are aware, but Airbnb is an app. It's a travel app. It connects people who are hosts who own a property and are looking to rent it out. Some people use a second property. Some people do their primary property or a portion of their primary property, and guests who are people looking to travel. It's quite an interesting story, actually. It started with, I think it was Obama's inauguration, and the co-founders were trying to find a place in Washington, D.C. to watch it, and they couldn't, so they ended up just crashing on someone's couch. And that was the impetus for the company, and now they're worth $100 billion. So pretty crazy company, but if you've never used it, it's great. I love Airbnbs. They're different than hotels. I find that one, you get a lot closer to the locals. I also personally love cooking, so for me, having a kitchen, it's a really nice benefit of an Airbnb, and it's just a little different. Like I've never been. If you're going to a really nice hotel, great. But most hotels are just it's a room to sleep in. So if they're relatively close in price, I'd rather the flexibility of the Airbnb because some of them can have really cool amenities, billiard tables, or a hot tub or pools. They're also great if you're going on a bachelor party. And you got 10 guys, and you need room for that everyone. You don't want to get maybe 10 rooms, save a little money. So yeah, they've been very popular and very fast growing company before COVID. That's a bit of background on Airbnb. I assume most people know this, but yeah, just to set the table so everyone knows what's happening. So Airbnb went public late last year. Originally, I think it was going to be about a $30 billion valuation, and then the stock popped and it's now worth over $100 billion as of today. It's fluctuated just below 100, but as of right now, it's the share price is 170. But as a never look at the share price; it doesn't really mean anything. Look at the market cap, which is the number of shares outstanding times the share price. So it's worth, if you buy the whole company, it costs you $108 billion about. So that's Airbnb. Full disclosure, I do own some Airbnb stock, very few. It's less than 1% of my portfolio, but did want to make that clear. And the reason is because I'm a huge believer in the company. I love Airbnb, and I try to invest in companies that, one, I believe and understand in the value that it's offering. And Airbnb, I definitely do. Two, they're not just stealing share, but they're creating share. So like Uber, I hated taking a taxi. So it wasn't just taking share from cabs. It actually created more of the market. People now use Ubers and cabs more than they used to just use the total world of cabs. So that's one thing I look for. And then the third thing, obviously, it needs to, I also call that tailwind, something that's helping push it, Spotify and the growth of streaming, stuff like that. The third thing is valuation. And I definitely believe in the secular trends and the tailwinds of Airbnb. I love the product. I've always had a bit of an issue with the valuation. It's been pretty fully valued to me because, again, they had revenue pre-COVID of $5 billion. So that's that's a price to sales of over 20. That's very high, even if they are a fast growing company. But something that I recently heard made me not rethink my position entirely, but it was an interesting data point, and that's how I believe you shouldn't just change your mind with the flip of a switch. As you accumulate more data, you can change your thinking, and maybe it strengthens your conviction or loosens it a little, and maybe that does impact your price target, but you shouldn't go from it's a buy to a sell immediately with any one data point unless it's it's a fraud. But this data point was not that strong, but I thought it was interesting. So it was, as we're all aware, in the US, there is a major labor shortage currently. I think I read some stat that there has never been more job openings in the States than there are now. And because of that, they're having to increase prices significantly faster for wages in order to attract people back to work. And so I was listening to a podcast, the All In podcast. And they mentioned a stat that said that hospitality employees that are non-managers, their wages went up. I don't remember the exact number. It was like from $20 to $30 or something like that, like 33%. Huge. And as many people are currently afraid of inflation. That's only going to get worse. And there's still the labor participation rate, which is the percentage of people that are participating in the economy, is still very low. And there's still COVID's pretty bad in some areas, so travel's still not 100% back. So this could only get worse as travel continues to hike back up, especially when we get peak travel season. So that was an interesting data point. And how I relate it back into Airbnb is Airbnb, their business model is completely different than a hotel. So the hotel, typically they own the property, and then they rent that out. And so they have their own fixed costs, which are typically their mortgage costs, and the cost to service the building, any maintenance that they need to do, taxes. And that's, as I said, it's a fixed cost. Whether they get 100% occupancy or zero, they got to pay that. And then they obviously have variable costs, which are staff, cleaners, electricity. So obviously, if there's more staff, if there's more guests, that's going to go up. But COVID was especially tough on these kinds of businesses because they went from maybe 90% occupancy to basically zero when COVID first hit, and those fixed costs stay extremely high. So it was very tough for them to swallow those losses compared to a company like Airbnb, which again is a marketplace. It connects two sides. It connects hosts and guests, and Airbnb makes money by taking a cut. They take about a 20% cut from the guest side and a 3% cut from the host side. I believe that's right. I could be misquoting it, but there are also hotels on there, so they only take a 3% there, but and there it's just the platform competing with Expedia. But that's their business model. So because of that, they have very low fixed costs. Obviously, they have developers and servers and stuff like that, but for the most part, it's pretty variable. So they can quickly up and down their expenses much more easily. And they were able actually to, I think, benefit from COVID much more than other travel companies. They got lean. They focused on their core business again. They shed some unnecessary expenses. I'm actually really excited about the business from that side. But again, fully priced valuation at 100 billion, and I want something that's not just fairly priced. I want it discounted because that's where you get those really big returns. So this stat, going back to it, that wages were going up, if this only continues, this is only going to push the math farther in favor of Airbnb. Because right now, you're seeing hotels with their fixed costs, they're not able to get full vacancy, and there could be additional uncertainty in the future with travel. I know some places still aren't allowing people in. And on top of that, their costs are going up on a variable basis because staff are getting more expensive and energy is going more expensive. As we know, there's an energy crisis. There's rolling blackouts in China. Oil prices keep going up. There's really I don't know if it's an energy shortage, but there's an energy shock, and that's leading to higher prices. So a lot of their costs are going way up. But with Airbnb, that cost is just pushed onto them. Let's say a host wants to increase their prices. Airbnb makes more money because they make 20%. So if the host increases their fees 20% to cover their costs, then Airbnb gets that. But if they don't, again, Airbnb's costs don't go up in any way. They're 100% variable costs, so they benefit immensely from the inflationary aspect. And I also think they're just really well set up for the next stage of travel, and that's beyond inflation. But I believe that people are changing the way they travel. I personally can work remotely, and so I've thought about, hey, do I want to work from? I'm actually going to go to Florida and work from there for a couple of weeks because why not? It's warm, and I'm in Toronto, Ontario, and it gets very cold in December. So I'm very much looking forward to that. And Airbnb says that I think it was 20% of their stays are now for more than 2 weeks. So they are seeing this as well, people going for longer and longer stays. And when that happens, I also think people can say, you know what, I'm going to make Airbnb my full-time living, because the tough part about an Airbnb to me is if you're listing it every night, that's a lot of work to make the beds, clean up, manage that. But if someone's staying for 2 weeks, 3 weeks, a month, 2 months, there's a lot less management. Again, the participation rate is down, which means people don't really want a full-time job. They're saying no to crappy low-wage jobs, which is leading to higher wages. But some people also just say, I don't want to work a full-time normal job. This is, obviously there was the whole gig economy thing that it's still alive and well between Upwork and Uber and Airbnb. But I do think this will be a more reasonable alternative for lots of people who maybe they just want a second income, or maybe they're saying, you know what, I'm near retirement. I don't want to fully retire because I can't, but I want to semi-retire, so this is a good way to do it. And it's something that's not too labor intensive. And it's something a little entrepreneurial. I believe people take pride in their work, and so I think they kind of like feeling like they're creating and managing a small business, which is really what it is. So I really think that the secular tailwinds between inflation and a tight labor market really benefit Airbnb. It will push more people towards hosts and also will lead to their cost structures getting even more favorable when compared to traditional hotels. So I would need to look into Airbnb's valuation a little more. I still think it's pretty fairly priced. But if there was a pullback, a significant pullback, I would definitely dip my toes in a little more, as I really do see the value of Airbnb, and I like marketplace businesses as well in general. Um, Potentially even do a DCF model or something where I look into Airbnb a little bit in more depth. But right now, I'd say I've done some quick analysis, and it looks fairly priced, maybe even a little overpriced. But I really do love the upside that it has, because they are not just competing among all companies. I mean, when you pick a stock, you are competing. You could do anything. You could buy anything. So you do have to compare it to other alternatives. But I think they're eating share within the travel industry, and I think the travel industry is only going to grow faster. So I think they have two tailwinds: a growing market, and they're eating more and more of that, or a growing pie, and they're eating more and more of that pie, a larger share of that. And then I also think there's optionality for them to layer on additional services. So I'm very excited about Airbnb. Again, full valuation, disclosure, I own, but I will do more analysis into the company and maybe share my thoughts when that happens. Thanks so much. Again, my name is Josh, and look forward to speaking to you again next time.